there's the bell. We welcome you on this Thursday morning, July 16th. Welcome to today's Trader Talk in today's market. Kevin Horner is en route to Chicago for the workshop this weekend. So I'll be in his stead. So I'll be teaching this morning and also the ETF class tomorrow, solo, because Kevin will be at the workshop. We also have with us Scott Thompson in the chat. Say hello, Scott. Many of you know Scott. My gosh, I mean, who doesn't know Scott? Okay, so introduce yourself to Scott. Say hello, Scott. He teaches getting started with stocks. We'll show that in just a moment, and he could share that playlist with you as well. Now, just real quick, Riceberg, good morning to you. Mike, good morning to you. Dom, Kevin, Crispy, Jay Richardson, Wrong, Paul. Got to take the names that I could actually say. Greg L211, welcome to all. Let's go ahead and hop right in. Now remember, this session is being broadcast via YouTube, okay? And so if we go to YouTube, you're going to see this channel, Trader Talk Schwab Coaching Webcast. You can subscribe for free. That way you can actually see our content on your mobile device, phone, iPad, whatever. It doesn't have to be a computer. Make sure you actually subscribe there for free. Now, also real quick as we get going, remember that with what we discussed, the information is provided for general informational purposes only. We're going to demonstrate specific securities in terms of analysis, maybe fundamentals, technicals, and so on. Understand that those securities were selected randomly. We'll talk about kind of some of the movements we're seeing in this morning's market. If we bring up options, remember that options carry a high level of risk, not suitable for all investors. When we talk about our examples, we will be using the Paper Money software application. And also remember when we talk about examples, they are just that. Now, also, we're going to talk about kind of some things we're seeing in the market right off the bat, which there's been some movement. And I'm just going to show you that instead of tell you. And also we'll talk about some sectors, and we're going to look at some different time frames as well. Let's go ahead and just hop right in, and I'm going to tell you what we mean. When I first wake up, there's 4 ticker symbols that I look at, okay? Now, if the market's not open, you might look at the futures, okay? That way you can actually see where they're trading at that time. But let's imagine we just woke up now. Obviously, we want to first look at the VIX. I mean, VIX is going to kind of tell us something about the volatility of the market at this current point in time. Volatility ticked up a little bit. Not a major factor, okay? But the volatility we're looking at is the S&P 500. If you wanted to, which many of you have been also looking at, is if you wanted to, you could also look at, let's say, second would be crude oil. Now, there has been some spit for spat, if you will, about kind of what's happened abroad. You're going to see that that oil has continued to go to the upside. Remember, it's not just oil, it's gas, okay? And if you look at that, that's continued to grind to the upside. This is maybe going to give us some setups in the energy space. When I say energy, we're talking about oil and gas, maybe natural gas, okay? So VIX, not a huge factor so far. Second, crude oil ticking up a little bit. Rates, when we actually look at this morning, little tick to the upside, still pretty elevated, okay? Still up there. And if you look at the US dollar, you're going to see that what do we got? We don't see anything there. So we don't have any alarm bells going off in terms of the big 4. Now, if we go down for just a second, okay, and if we added maybe 2 others that we could actually look at, we would say number 1 would be gold. And if you look at gold, gold is really looking like it's getting weaker and weaker by making a lower high. Here we are at $52 down, about 1.29%. And I mean, it just seems like we're holding on like this is like thin ice at this point. As far as gold maybe breaking down, it's tried to rally. But every time we actually got a rally, it just kind of quickly sold off. Now, some people might be saying, hey, could gold drop? Some of the stocks in there, like NEM, AEM, among others, could those get drugged down with it? Wouldn't be a shocker. Now, if actually gold is actually going down, you're going to see that actually silver is also under pressure. Silver was just at 121, okay? And if you look at silver, maybe the more volatile of the two, you're seeing that that's already starting to break down. Now, in the market, you got to remember that not everything's long. Some people will take bearish positions, forecasting that the prices could drop. Gold and silver, to point out first off, those might be two examples of bearish trends. Okay, now we'll look at that in just a moment. Now, also, when we actually take a look at kind of the movement that we've been watching, is if we pull that, slide that back up, the semiconductors have really been, well, they've been horrible. Okay, well, at least in the last month. That is continuing today. Okay, about 2 weeks ago, we did a bearish example on one of those stocks, and you're going to kind of see that the semiconductors, why are very few buying? Because there's more sellers than buyers. Okay, if we've gone up, we only went up for a day and then sold down. Okay, went up for a day, sold down, and so we can't get any buying continuation, just more pressure. Semis. Okay, now we're looking at the index. Think of maybe another tick or something you might be looking at, but that area just kind of being drugged down. Now, so that might be another area if you said, look, I'm looking to kind of maybe have some bearish component in my portfolio. Could those stocks drop? That's the idea. A lot of those stocks went up a lot, which means they could go down some, and they currently are. Could that continue? The NASDAQ, if we look at this and say how severe is the semi-selling off affecting the NASDAQ, it's holding. The key word is so far. Okay? The S&P 500, not as much affected. Russell, if you take a look at that, as it's trying to get that turn. Soft, we would say, not a good bounce so far. The one that's getting a little bit of a push is the Dow Jones. Think United Healthcare. Okay, we'll look at that in just a second. If you look at this on the Dow Jones, better if we said of the four, which ones are getting the bounce? It's really the Dow Jones. That's the one. We'll go back to the equal weighted, and here we go there. So there, we looked at the kind of brought up two futures, which is the gold and silver. Second, we actually brought up the indexes. Okay, Dow leading so far, and really the equal weighted still showing strength in the S&P 500. The bearish alerts, okay, going off, clearly gold bearish, silver bearish, semiconductors a continuation of bearish. Now, are there any questions with that? Okay, yeah, so let's now just real quick as I get some more, I'm going to double check and see if there's any questions. Right now in the sectors, we see transports. Okay, now you got to ask what part of transports. This kind of, let's go look. Okay, let's go to analyze. Market watch, visualize. And what I'm going to do is just bring up, go to the S&P 500. Now, we don't have transports, we have industrials. So we're going to ask ourselves, like, what part of industrials is getting a push? GE getting a little push, Cintas. You're also going to see Triple M, 2.5%, and Love getting 3.5% push. So if I double check this, we're looking at transportation. Go look at Love, okay? Love trying to show a little bit of bounce there going into the earnings. Let's show the airlines just real quick. Delta, nope. United Air, which actually had earnings, which actually dropped on earnings. And Ryanair. Geez, look like Ryanair is actually the one that's been holding up maybe the best, okay, of the bunch. And I did not include Alaska, forgive me. Okay, Alaska, no. But if we take a look at the also GE, which was there, Triple M, yeah, getting a little bounce there. Okay, so transports. Now, the one that we're also kind of seeing a little movement, I see it in the chat, the staples. Now, feel free. You do not have to look at the tickers I'm looking at. I'm showing the sector as far as an index. You might just use the product that we talk about tomorrow, like ETFs, to look at these. Staples firming up a little bit, okay? You're also seeing real estate firming up a little bit, trying to hold support and or make a higher low. We also obviously talked about crude oil. There's your energy. We're going to watch again this morning, Exxon, to see if we're getting a push, Chevron, and a couple others. Utilities, not as much. Discretionaries, and last one, communication. So of these that we would kind of say, let's kind of highlight I'll move that out of the way. Communication, energy, okay, real estate, staples, healthcare. We did not say healthcare. Shame on us. Healthcare, let's highlight that, and transportation. Just do control space bar, and what it does is it puts a little check in there. Okay. Now, just real quick. Okay, JB Hunt was up too. Now this, I'm just trying to kind of see. There it is. Thank you for that. Who said that? Carol. Of course it was Carol. The other one we want to kind of keep an eye on is, what about the choo-choo trains? Choo-choos have continued to grind. Okay. CSX. And let me also just think UNP. There it is. Of those groups, whether it's rails, trucks, water shippers, FedEx, okay, ground shippers. It's not the ground shippers. UPS actually looking the stronger of the FedEx and the UPS. And then the airlines, it still looks like rails is actually leading the charge here. Okay. Now, any other questions just real quick? Yeah, good morning to you. Now, I'm going to go back to, so let's kind of now move down to just real quick the Dow list and the NASDAQ. Let's kind of dive into this. So first off, you're going to see that UNH announced earnings this morning. Estimate was 487. Actual was 638. Kind of interesting that they didn't update those earnings or kind of give a preliminary outlook. It's very unusual that you see a company over deliver by $1.50. Now they might have set a low bar for themselves, okay, but got it 638. Stock popping here today, 8.5%. Not a bad move, okay. Now if you saw the premiums that many pay, might not be surprising, okay. But if we also go back and say, look, it's UNH. But are there any others in healthcare that are also getting a push as well? Lightest green, there's UNH, stocks like Abbott. But what I'm really looking for is stocks like maybe CAG. Cardinal Health. Why is that? Cardinal. Pull this up. Anybody know the ticker symbol for Cardinal Health? I think it's CH. No, I might be wrong. Check me on that. Keep an eye on CAH, I think it is. There it is. Yeah, it's not moving. Okay. So it's really right now, it's just UNH is really getting the move. Now let's also go down the list. Now, Dean has been very patient with Coca-Cola. Coca-Cola is still grinding away to the upside. Okay. And let's start kind of getting into a little bit more of trade examples, okay? So first off, I'm just going to look down this list. So we already highlighted some of the sectors that are kind of standing out. I'm going to kind of highlight these UNH for just a second. Coca-Cola will highlight. If I look at also this list, and I'm going to pull this up. Johnson & Johnson, not yet, but trying to hammer. And if I go down to this list just real quick, I'm going to look down. The other one that kind of stands out that we talked about yesterday was Starbucks, okay? Let's highlight that. And let me just look at the S&P 500, and then we're going to, well, geez, there's the energy list. But let me just bring this up so we can kind of see what's getting a move, okay? There's the healthcare, okay? Not surprising. What does Abbott look like? Abbott's getting a big move. Okay, so, and there's JB Hunt, okay? Now, let's do this. Let's see if we kind of can't take this morning's action, kind of come up with some trading ideas, okay? Now, again, when we usually look at, let's say, markets, we're more top down. We want something where we have a bullish market, bullish sector, and we find a bullish stock, okay? So the foundation of that is that we're looking for something where the price is above both moving averages. The 10-period moving average for momentum and the 20 or 30 for a trend, whichever one you use. Now, in our examples, let's go back just real quick to Starbucks for just a quick example. Now, Starbucks kind of really has like your classic. You got a prior high, you fell down, and you've been grinding away to the upside. These higher lows on the right-hand side, I think a lot of people just sweep underneath the rug and really don't think it's really doing anything. It's actually making support levels, okay? You get a couple higher lows and you connect those, okay, higher lows. Here we are right now at this area of resistance. Now we got earnings coming up, 7/29 in 2 weeks. Now, the one thing is, what type of strategy might the investor be thinking if they had earnings coming up? What type of strategy? Now, as I'm pulling this up, I'm going to kind of show just real quick the implied volatility. We want to kind of bring this up to kind of say, is volatility building? Is it staying the same? What do we got? That volatility on the bottom is increasing. The volatility actually currently right now is at 40. Now, it's not the highest that it's been. That was actually right here. But if we looked at this on a yearly basis, I'll back this off. If we said this was 30 was low, if we said 35 was middle, and let's say 45-ish was high, we're kind of near the high camp, okay? Now, what type of strategy might you consider given that? Now, when I look at this and I see this is 40, I'm thinking to myself, if we buy something like buy a call, buy a put, they're going to be more expensive, which means you got to get more movement to break even. Now, the investor might be thinking, now let's double check the numbers, okay? Let's say the investor says, look, I am a stock investor. All right, fine. If the investor is a stock investor, we come to this, and let's say the investor said, look, I want to maybe try to buy a put for a shorter period of time. Why? Protection, okay? That's not a hard thing to understand. A lot of people want to protect what they have. That makes sense. Now, you could do that or try to do that through buying a put, which is the right to sell. It's not free. You got to pay for it, and it doesn't last forever. Now, when I look at this, I'm going to show something something I don't normally show. If we go buy a put 20, 50 days to expiration, a monthly option, and we go look at the delta, the strike that has a delta of 30 to 40, it's going to be the 105. The problem is if we pick the 105, as we saw the implied volatility is higher, the premium's higher. Implied volatility is higher, premium is higher, so is the ROR, okay? We normally talk about getting something that maybe has at most 2%. Now, that number right there is pretty much taking the option premium divided by the stock price, okay? That's what it is. Now, so it's too high in this example. Could we come down here and say, look, we're going to buy the shares and then buy a lower strike put? What's the con about that? Well, the strike, which is the right to sell, is lower. So the stock would have to drop down lower for that to really make more sense to have the right to sell it, okay? And maybe want to sell it. Whereas if we got the 105, that safety net, if you will, is closer, okay? Now, so that actually, what does that mean? Well, it means that you actually have more risk. So if we click on that 109.32, click on that, we now have the 100 shares. Step 2, we're going to come down and say single order, first triggers SEQ. There it is. And now what we're going to do is just come back right to the ask price. If I click on that, it's going to give us $2. Now, whatever the premium is, now let's look at this. The 100, we have the $1.81, $2. We could maybe try to get $1.90 out of it, okay, or pay $1.90. Whatever that premium is, that's what the stock needs to go up by expiration to break even to offset the cost of the put, okay? So if we added this up and said 108.32 plus the put, 190 at expiration, anything above 110.22, gravy, profit, okay? Unrealized profit. So if we're at 114.22, we're at $4. If we're at 117, do the math. We're at 111.22, we're up $1. We're at 109.22, you're down $1. It's as simple as that, okay? Now, here's the deal. We're hoping that the put never becomes worth something. We're just doing that for downside protection just in case it gaps down. If it gaps down, the put becomes more valuable typically, but also until expiration, it's the right to sell at the 100. That's different than a stop. We need to understand that. Now, I want you to go ahead and practice this in paper money with me. Practice it today. When? Today. Okay? We're going to buy the 100. We're gonna buy the 100 put and buy 100 shares of stock. We don't have to buy 100 shares of stock, but we're going to. We're going to say confirm and send. And now always remember that there is a commission with the put. Always remember also is what is the defined risk. That defined risk is really from 108.21 down to 100. How much is that? $8.21. That's the stock loss, but we also want to add on the cost of the put, the $1.90. So in this trade, it would really be about right at $1,000. So if this stock just fell down to 50 bucks and we wanted to exit, we'd be down probably right around about $1,000. Okay. Now let's actually go back. So trade number one, Starbucks, a married put. However, some of you might have said, James, with that volatility actually going up, I don't want to actually buy something. I want to sell something. Okay. So that's a different conversation. But I think maybe alert, kind of bullish alert continuation might be Starbucks example number one. Now, let's go back to something just really quick that Sam is bringing up. Sam, how you doing this morning? Now, if we pull this up, what I'm going to do is I'm going to just bring this back up. Let's go back to the S&P 500. And I want to just bring up, if you don't mind, let's go back to UNH for just a moment, okay? Now, on UNH, notice kind of what happens on that earnings, right? It doesn't matter if the earnings are good, they're bad. Usually the volatility drops, okay? We see that. The volatility going into today was at 40. As of right now, it's down to 32. 32 is still pretty good, okay? It's kind of more that medium-ish range to high, but it's dropped. And that drop has been happening because earnings is out of the bag, if you will. Second, well, the stock actually went up. And now what you're going to see is some of that pop that we actually had, it's faded a little bit. Why does it do that? Okay, well, sometimes people wake up in the morning and say, my goodness gracious. I mean, I just woke up. The stock is up what? It was at one point up $42. And all people did was wake up. Some people might say, you know what? I'm going to take a little bit of that. And they sell some. Now, where were we on the moving average envelopes? Okay. Well, we woke up today at the white line, above the white line. Now remember, that yellow line is 3% above the 10-day moving average, depicted in light blue, okay? 5% the red line, white 7%, and the blue line, that's what, 10%. So the higher you get above that, the greater the chance that we could flag back or pull back. Now, in our example of this, we're going to try to actually put on a position. Let's just verify for just a moment, okay? So when you look at this bid-ask spread, you're going to see that it's still pretty wide. The thing that we could actually maybe look at, it'd probably have to be the 430 or maybe the 420, but we got to make sure that we get somewhere in the middle, maybe 410, okay? Now, second trade example, okay? And we'll send that actually Starbucks through. Trade example number one. Trade example number two. We're going to come in and actually look to do, let's say, like a 420. Now, if we sell the 420, okay, now we're going to make this like a short put vertical. If we sell the 420, and by the way, we could actually probably go up to even here, sell the 430 and then buy the 420. Now, what does it look like? If we sell the 430, that really has a 28 delta. Okay, so it's a little bit less than that range we normally talk about. Now, the second thing is we're going to come up and sell vertical. And now what you're going to see in this case, if we sell vertical, okay, it's going to be right there, 430, 420, 220 credit. Now, what you're now going to notice is if we bring this up, you're now going to see what's the max gain, max loss. We're looking to see what is that gain potential to the risk, 780, and that gives us 28%. Some investors might say, if I don't get at least 20%, I'm not going to do it. The floor for many investors might be 25, but we're at 28. What's making the number a little lower? Well, we're selling lower than that delta 30 to 40. That's number one. Number two, the volatility dropped on the earnings day. Okay. So now we see the break even expiration for 27.80. We see it. Okay. That is the break even at expiration. So trade number two, short put vertical on UNH post the earnings. Now they raised their outlook going forward. So we know that the stock popped, but could that actually, maybe could some investors be buying in expectation of the forward earnings could actually increase over time? Now, if the earnings actually keep up with the premiums, well, maybe it could. We'll just have to see. Now, I'm going to also go back to, let's go back to just real quick, energy. Now, if I were to ask you a question, are you watching any energy stocks? Yes or no? If you are watching energy stocks, type in those stocks that you're looking at. Any? Now, let's take a look at this just real quick. I'm going to pull back up. So let's go back to Market Watch, Visualize. Okay, we're going to go back to energy. And if we looked at this, nothing is standing out like massively up because we don't see light green. But there are some of these, like we talked about the refiners, Valero, MPC, and PSX. Those have continued to grind to the upside. That's not new, okay? MPC, PSX, and Valero. They've been some nice moves. We talk about those because as oil goes down, the refiners buy the oil to actually make the product gas, among other things. It was a nice setup. The input cost was low, and you're going to see that, and as you have the low input costs, the spreads of their potential profits might be higher. Okay, so now, I'm not talking about that this morning. I want to go back to XOM for just a second, and I want to go back to Chevron. Now, Chevron and Exxon does refining too. Now, I'm going to go back to just real quick, ExxonMobil. Why? Well, if you look at this, we talked about this yesterday saying, could Exxon squeeze inside the salt channel? Okay, let's circle back to this for just a moment. Today, we're going to see that on the chart, we see a Cohold dot. That Cohold dot is saying that it's trading above the high of the low day. So when we say low day, we're talking about the most recent red candles. Candles plural, if there is more than one red candle. The most recent red candles are there, yesterday, and there. Which of those two is lower? There. And you're going to see that was yesterday. That is why there's a green dot on the chart, because we're trading above yesterday's high. Let me repeat that. Look at the most recent red candles. If there's only one, it's easy. If there's more than one, which one is lower? If you're trading above that, should be getting a green dot on that chart. That is what's called trading above the high of the low day, and or if you're closing there, close above the high of the low day. Now, we're going to right click on this chart, trade number 3. We're going to go to buy custom with OCO bracket. Now, if we did this, what we're going to do in this case is we're going to buy some shares of the stock thinking that the price might go up. Now, the foundation of this is really that crude oil prices might continue to go up a little bit or stay more elevated. Okay? Now, what I'm going to do is, as far as the target, Lucky, I'll send it to you in just a moment. I'm going to put the target right about 154. Limit data GTC. Okay? Now, stop underneath this. I'm going to use yesterday's low as a place to set a stop below. What is yesterday's low? Well, let's just go back to a kind of little, let's run the numbers, okay? So 145.85. If I use yesterday's low as a place where we're going to call it support, if you will, a place to set a stop below, 142.03, it's going to give us 139.19. Place to set the stop. 139.19. Okay? And if we take a look at this, the risk in dollars, now this is, I'm going to asterisk this, so this is very important, okay? Forecasted. Forecasted risk. Why? Well, Because that stop is a market order. That doesn't guarantee that we're getting out right at 139.19. We on the same page? So this is the forecasted risk. This is if the stock hit out right at the stop loss. That's a big point to make. Okay, triple sixes. Now what you're going to see in this case, the risk percentage 4.58. So just double checking these numbers. Yes, data GTC. All right, they're there. Now if we just use 100 shares, just example given, we're going to look and see if this can't push to the upside. Now this is not the only one. We're not saying that. And I'm going to go back and see which ones that you're looking at. Of course, the refiners we talked about, okay? But which other ones? Now, so number one, how do I get this chart? So let me take off this chart in terms of the volatility, okay? And let me send this chart. So if you say, hey, I don't have the settings of this chart, there it is right there. How do I put that on your screen? Go to setup at the top right, open shared items, okay? And then we're just going to copy and paste that in right there. So that's not too bad. Take what's in chat, go to the very top right, setup, and then open shared item. Open shared item, just copy and paste, preview, and then import. Once you preview and import, there you go, okay? Now this chart also does have some labels at the top that I think are helpful, okay? And you're going to see things like how many days has the whole moving averages or the 10-period moving average been green? It's been green for 10 days. Year to date, percent change, things like that. Dividend yield, PE ratio, payout ratio, etc. Okay. Now, so if you want to save that, how do you save it? Well, if you save it, just go to Style and then say Save Styles. That's not too bad. Okay. And I'm just going to come up with who asked me this. This is Lucky who asked this. Let's go save. Where do you find it? Go back to Style, Load Style, and there's Lucky right there. So that's not too bad. Okay. Now, stuck in channel Oxy hasn't really reaped any gains in CL. Well, let's go back to that. Okay. So let's go look at Oxy just real quick, kind of see the move. Do we have anything? Now, so far, the one thing we would actually say on Oxy, it's had a move off the bottom. But lately, it's kind of been in the process of trying to flag. Now, if we take a look at this and say, where's the bottom of this channel? It's probably right around 53.20. If we look at where's the top, $60. Now, the thing that we would be looking at this, who said this? This was, double check, Sam. Now, if we take a look at this, you know, we got one red candle and then got a bounce. We've actually had so far one red candle, 2, 3. Now, what I'm going to do, of these recent red candles, let me zoom in. This red candle, the second one, is the lowest, most recent down day. Now, what we're going to do is we're going to take that high, right-click on the chart, buy custom, and we're going to go with OCO bracket. Trade example number 4. What we're going to do is we're going to kind of, now, this is kind of me just trading off the chart, right? What I'm going to do is, let's say if I sent this through, it will put the orders on the chart. We can slide them around to where we want. But if we just kind of put the order 60 and setting a stop below that support of 53.20, 53.20 less 2%, 52.13. Now, normally if the stock is $50 or lower, we take 3%. If we add 1 more percent, it's 53 cents. To me, this seems so close, just to try to give it a little bit more breathing room. And so I'm going to take less 3%. Got 51.60. So I'm going to take that 51.60 right there. Okay. Now, is this order the way we want it to? No. We want to change this to stop limit. Okay. Now, if we did stop limit, we're saying go to this price or higher. And I'm going to put a cap. I'm going to put a cap of, let's say, 50 cents above where the buy stop is. So if we go to, let's say, 50, 60, 54, 67 or higher, you can buy it up to a limit price of 55.17. I just did 50 cents difference. Target right around 60. And if we look at the stop as those numbers shifted, 51.60. There it is. Okay. Now, this is so foreign to some people because they're like, wait, why would I buy something if it's higher? Well, you're waiting to see if it can't get a bounce. You're saying, show me that it's bouncing to the upside, and then I'll buy. This is an order. It's not going to fill until we go to 54.67 or higher, but it cannot fill more than 55.17. Okay? This is huge. If you're trying to play bounce trades or breakouts, using a buy stop order, a buy stop limit is key. Buy stop, there's no cap on what it's willing to buy it for. Buy stop limit, you place the cap. Usually when we place the cap or the limit price, it's just 1% above where we're trying to buy it at. So if we said, hey, 54.67, 1% above that is about 50 cents. Okay, any other questions there? Now, let's also go, so Sam also makes mention the out of the money long call is going cheap on Oxy. Funny you should mention that. Now, so here's the deal. Some investors might say, look, I don't want to buy the shares. Okay, I just don't want to. I just want to have a right to buy the shares. Well, let's kind of come back to the open interest on these have actually been, they're in the thousands. Let's say the investors said, look, we did the stock example, fine. But let's say the investor said, look, I just want to have the right to buy the shares at the strike price. Just the right. Now, there's kind of two paths here. A, you just want to trade the option price and you don't really want the shares. Second is you're using the long call for the potential to buy the shares because you can exercise. Okay. Now, let's say the investor says, look, what I'm going to do is I'm just going to buy this long call at 52.50, and I want to kind of see what the break even is. I'm not sure if we would say that this is low. That implied volatility, when I think low, 15 to 24 is low implied volatility categorically that we look at. 25 to 34 is medium. 35 plus is higher. Okay? Think in those three baskets. If you look at this implied volatility, we're at 41. The break even is at 55.95. Remember, if you buy that long call, you need a quick move so it can offset the time decay and maybe the volatility drop. Okay. When you buy that long call, what the investor could lose potentially given this strategy is $345. Okay. So that right to buy the shares is not free. It's $345. And you needed to go up as soon as possible. At expiration, we needed to be $55.95 or higher to break even. Why? Because we buy the shares at 52.5 potentially, and we pay $345, add them together. There's your break even. Okay. Now, just real quick, now if I go back. So Sam, note, I just want to kind of follow through on that and look at that. Now, any other questions here? Any other questions? So when we kind of come back to say kind of what examples did we do? We did Oxy, we did Exxon, we did Starbucks, and we did one other as well. Which one was that? Now I'm going to UNH. Now the one I want to kind of come back to for just a moment, okay? Yeah, let's take a look at this just real quick. So I want to go back to the thing that we're watching this morning is want to be watching SOX has held a little bit, okay? But again, we're not saying bullish in this area. I mean, this is kind of break of support watch, okay? The other thing that we're really watching here today, could this actually go lower, is gold, okay? And silver. Just kind of watching that. Silver, that bent down below the support level. I want to look at NEM for just a moment. Here we are coming into the earnings on NEM, and we're just right at the support level. We're just picking some of the bigger names in the gold space. AEM has already been in a downtrend, okay? This is pretty amazing when you talk about AM was up at 255 and we're literally down to 138. This shows you when people sell, they sell and they can sell hard. Okay. This really also shows you when you have a weekly chart that is down, which it has been. It's not just today, okay? When those moving averages are red, especially the 20 period moving average, it's been red. And it's been red since March. And this really goes back to is that when you do not have that weekly chart that is in your favor, there tends to be more selling than buying. Oh, when it's going up, it's just unbelievable. Okay? When we have that 20 period moving average right there, just green, 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 just the movement can be unbelievable. And this 20 period moving average, just right there, nice little run to the upside. But you got to understand when it can do that to the upside, it could also do it to the downside. Okay? And we see that 20 period moving average just been, well, flaming hot. And usually red is not buying. Red is selling. Okay? So they're just doing the opposite of what they did. Don't take it so personally. Okay? They're just trading green and moving it red moving average lines. Okay? Now, just real quick, also, any other questions? Okay? I just want to go back and really look at those, okay? And now, let's also go back to, just real quick, when we talked about this morning, kind of let's go back to SPX EW. Let's go back to the 1 year daily chart. That's still trying to make another higher low. We're going to continue to watch that. If we also go back to the healthcare, now remember, with earnings coming up, some investors might say, look, I'm not going to buy as many individual stocks with some earnings coming up or a lot of earnings coming up. They might just buy a group, okay? That group getting a strong bounce here today so far. Healthcare, thanks to United Healthcare. The staples, if we kind of speculated and said, is there another sector that might try to get the bounce? Staples. And also just real quick, if we said, is there another group that the investor might consider to say, I'm going to consider maybe buying perhaps, they might say energy, okay? Now, so remember, when you're around earnings, instead of buying a company, they're buying a group of companies. Don't forget that. Just because there's earnings coming up, that doesn't mean, there's nothing to do. It's just, they might buy the group, okay? Now, any other questions? Okay, now let's go back to just real quick. Let me pull up the S&P 500. I want to see if we missed anything. When we also take a look, I just want to see if we missed anything on the S&P 500. The one area, let me just scroll down for just a second. We talked about the JB Hunt. The one that mentioned that we said before, and let's kind of finish here, is the retail space, okay? Now, yesterday we talked about Target, right? Target kind of being if we said between Target, Walmart, Costco, it's Supertarget that's grinding to the upside. Now, it's not just Target. We saw Dollar Tree getting a push. But if we said, is there one that's maybe breaking out? It is yours truly, Dollar General. Now, if we take a look at Dollar General, you're going to kind of see that reversal area was right around, let's say, where? 125-ish. You can break the 125 levels here, 136, 144, and 155. So let me just kind of say a scenario, right? Someone says, well, the investor can't do anything because of what's happening abroad. Here's my point to that. There's always going to be something outside the U.S. or within the U.S. There's always something. So we got to stop thinking I can't do anything because there's whatever, okay? Remember what we said, the market gets used to dysfunction. Just look at the VIX now, okay? It's almost at a low, okay? Now, the one that we're going to end on is the Dollar General. Right click, we're going to go buy custom with OCO bracket. Now, trade number 5, okay? We're going to do the example of could it go to that next level, 132-ish? We're going to set the stop right underneath yesterday's low. Where is that? Well, that was right at 119.50. And if we take 119.50 less 2%, it's going to be 117.11. Okay? 117.11. So in wrapping up today, The what's been selling off, gold, silver, and semis, it's just a continuation of that. Okay. The sectors, I think kind of we flag something that's maybe newer as of today, United Healthcare, helping the healthcare sector. The other thing that's kind of newer as we come into many of these earnings, we did 4 trade examples here today. Okay. And we tried to answer some questions along the way. I want to say thanks to you and also thanks to Scott Thompson as well. Coming up right at the top of the hour, let's go back to this. Now, remember, this broadcast is broadcast via YouTube, right? Our channel, Trader Talk Schwab Coaching Webcast. The webcast schedule, you're going to see that coming up. The next class is going to be on long verticals and diagonals, investing in dividend stocks, and I'll be back on right on trading the trend. Now, on also, if you said, James, I'm more new to investing, later today, new to investing, okay, with Alex Coffey. So thanks so much for your comments and your participation. And with that said, I'll be back on later today on Trading the Trend. And also remember that with what we just talked about here today, all investing has risk. And this has been the Trader Talk in today's markets. Thanks to Scott, and again to all of you here today with the questions. Have a great day, and stay tuned for our next webcast on long verticals and diagonals coming up next. Take care. Bye-bye.